All right, well, welcome everyone. Thanks to Brandon and Crypto CFOs for having Matt and myself on today to speak about crypto tax software. So a little bit of background about Matt and myself. So I myself, um, I've been in crypto since around 2017. Co-founded a company Cryptocate in 2017, and I have basically become deeply involved with all forms of DeFi, DAOs, and crypto degen as a result. Our company started by helping people out with education in crypto when things were a bit unknown earlier on. And in 2019, here in Australia, the tax body here, the ATO, basically released some guidelines, and we became one of the first crypto tax specialist firms in Australia. Our company specializes in using crypto tax software like Crypto Tax Calculator to prepare financial reports for various entities. We've done work with self-managed super funds, companies, DAOs, basically all forms of entity. And trading volumes, activities, we've basically seen a bit of everything. And that puts us in a great position to be able to share our experience, and hopefully we can provide some info today that's useful to everyone out there trying to use crypto tax softwares. We're accountant agnostic as a firm, so we don't do accounting submissions. We're actually tailored to be able to partner with accountants that are more traditionally Web 2, that are looking to hold on to or go after Web 3 clients. And we sort of plug into their systems to do the crypto side and allow them to focus on the traditional reporting side. So that's a little bit about Cryptocate. And I've got Matt here from Crypto Tax Calculator today with me. We like to join forces occasionally due to our synergy. So I'll let him tell him a bit about himself.
Cool. Thanks, Mark. Yeah, a little bit about my background. I come from more of a TradFi background, traded stocks and options for a handful of years, went into investment banking. As you can imagine, when you work in TradFi for a while, you notice a lot of inefficiencies with how financial markets operate and that sort of stuff. So in the back of my mind, I always thought there should be some sort of other monetary system going on. Then in 2018, that's when I first discovered Bitcoin and Ethereum and slowly all the other coins. And as you can imagine, once you discover those coins, it falls into a deep, deep rabbit hole. So ever since then, been learning every day. As you can imagine, there's a lot to learn in this space. And started a crypto VC in 2020. We've made, I think, over 50 seed investments by now. But yeah, absolutely love this space. Spend all day either on crypto Twitter, looking at charts, or working with Crypto Tax Calculator, which is part of my day. A little bit of background about CTC, Crypto Tax Calculator. The company was founded in 2018 by these two brothers, Tim and Shane. Both have engineering backgrounds, both super degen. They were doing all sorts of things in crypto, made a lot of money, were there for the ICO boom. But the issue they face is when it came to tax time, they both accumulated, I think it was close to 30,000 transactions each. And it wasn't just your simple buys and sells. They were bridging tokens, flipping NFTs, doing all sort of madness that you can do on chain. And at the time, there was not really a solution that could handle all their tax complexities. So what they did, being engineers, they ended up building the software themselves. And that leads us to CTC today. We've been around for about 5 years now. The platform, we say it's built by degens for degens because we really specialize in on-chain activity, which is like DeFi, NFTs, the stuff that is actually quite hard to handle from a tax perspective. And yeah, the company's growing pretty rapidly, which is pretty exciting. We've got over 250,000 users on the platform. Recently partnered with Coinbase as their global partner, which is quite exciting. And we also do have thousands of accountants worldwide working on the platform. We have a special portal for accountants, which I will get to a bit later on in this demo.
Awesome. So as I was saying, Cryptocate and Crypto Tax Calculator have found a lot of synergy. Our company, Cryptocate, having to prepare tax reports, we experienced this problem of complexity that Matt's talked about firsthand. We started doing tax around the same time. Tim and Shane from Crypto Tax Calculator were building their product. And at that point, there was certainly more limited crypto tax softwares available in the space. There were a few options, but certainly less than there are today. And the tools were a lot less advanced. And those tools have obviously been continuing to develop over the last few years. And Cryptocate has partnered with CTC as our recommended software tool. And we now work closely together with this iterative loop, I guess, of Crypto Tax Calculator referring us clients that need assistance, and us obviously working with those clients, understanding their complexities, and in some cases solving those complexities using the software tools. And then we provide feedback to Crypto Tax Calculator, and we've been on this iterative loop of continually providing our feedback and helping CTC refine their product. And I'm sure many other accountants provide feedback to Crypto Tax Calculator, and they're really receptive to that feedback. And it's been great working with them because they're really open to building new things that we think are useful. And as a result, I believe Crypto Tax Calculator is really doing amazingly to streamline people with complexity in crypto tax. So yeah, we've been working together for a number of years now. And that's why today we're particularly going to focus on how Crypto Tax Calculator, as an example of one of the tax softwares out there, can make things easier. And also we can talk a bit about, from our experience using these tools, where are the areas that are still challenging and will likely see improvement in the future.
Yeah, and sort of just to add to that, just to emphasize your point, Mark, like I think it's a really good feedback loop because we get lots of clients come through, and look, no tax software is perfect. I will say it now. If it was, you wouldn't need accountants and that sort of stuff. So when we do come across like edge cases or clients who have quite complex scenarios, that's when we pass them on to a specialist like Mark here. He'll go through, and he's on the platform, for several hours a day. Anything that he picks up or any new feature requests, integrations that he needs, he'll give us that feedback. And it's a bit of this vicious cycle, which works quite well for the both of us here.
Awesome. So no tax presentation would be complete without a classic disclaimer. So yeah, while we speak from a lot of experience, obviously none of what's contained in this presentation should be taken as tax, accounting, or legal advice. So I had to throw that up quickly. I'm sure everyone was probably expecting that to be the case. So all right. So to preface everything, I'd like to quickly start with like a where are we now slide, I guess, and that's what we're depicting here. So cryptocurrencies have been around for quite a number of years now, since 2009, and we've seen a real evolution from cryptocurrencies like Bitcoin and Ethereum. Well, really starting with just Bitcoin that did not have smart contracts, the introduction of Ethereum and smart contracts. And now obviously since Ethereum, there's been an explosion of DeFi and layer twos, all different blockchains that are supporting smart contracts. And really now we've got a thriving industry full of exciting applications that use DeFi to function. And really from a tax perspective, what that means is there is an insane amount of complexity. And that complexity comes from how diverse this space is and how fast it's grown. Where we might used to have just had to figure out how to tax report on Ethereum DeFi. Now there is, at least 20 plus, like there's even far more than that, blockchains out there, but these are just, your top 20 core blockchains. There's already so many different formats of data, so many different types of activity, and we're really in this expansive state where things are coming into the system much faster than the tax space can keep up with integrating the data, how to reconcile the data. Certainly the space is growing a lot faster than any of the tax jurisdiction bodies can keep up with. So, it doesn't matter which jurisdiction you talk about, authorities are scrambling to provide tax guidelines and to enforce tax in crypto circumstances. But I think the whole space is very aware of how much of a challenge this is presenting. And yeah, so I think it's more important than ever to be aware of the benefits and challenges of crypto tax softwares, because from my experience, really the complexity is such that you can't do this manually anymore. You could, and we're even going to sort of show you what that might look like in a minute, but it is really challenging to the point that we need a better tool than just Excel spreadsheets. And that's why it's so important to look for partners like Crypto Tax Calculator that are really progressing the software space.
Yeah, I absolutely agree. I guess before smart contracts came along, everything was pretty simple. Just your buys and sells of BTC, nothing too crazy to work out. But ever since we've had these smart contracts, people doing all sort of crazy things, doing things on chain, flipping NFTs, aping into liquidity pools, that kind of stuff. And I guess from a software perspective, one of our main goals is to really try automate as much as possible from a smart contract level. And as part of what we're seeing with this, we want to make sure we're applying the correct category, applying the correct tax treatment, just like you said. And a big part of this actually comes from keeping up with the latest trends. So you'll notice a few months ago, it was kind of like meme coin season. So for us, we need to make sure we've got all the price feeds for these tiny market cap coins. Throughout the last 12 months, everyone's just been airdrop farming. So as a software company, we want to make sure we've got the automation, we've got the integrations for blockchains like zk-Zinc, like Celestia, that kind of stuff. So yeah, it's a constant work in progress. And as we see the space get more and more complex, people doing crazier things on chain, I guess that's where software really needs to keep up in that sense. Cool. So the next couple of slides are pretty interesting. You might be wondering, if you haven't done your taxes before manually, first of all, you're very lucky. It is a very painful process. Both myself and Marc have done it on thousands of transactions, and by the end of it, you just want to pull your hair out, because it is quite literally a nightmare. But what we're just about to show you here, I'll go ahead and play this video. It's just about a minute. So to give you a bit of context, what is happening here is there's about 250 transactions that we're pulling from Etherscan, which is a website that displays public blockchain information. It takes about 20 minutes just to download the records from Etherscan, build a basic template in Excel to calculate the capital gains and losses, and start cleaning up the data. What we're doing here is we really want to make sure the movement of tokens between the wallets is quite easily understood. So for example, if it was to dispose, write that, it's a disposal from this wallet over here. If it was a transfer, you want to make sure that is listed within the Excel here. There are also a lot of things that you need to cross-reference. It's not as simple as chucking it in there and cleaning up the data. If you're based in a country that doesn't use US dollars, you do need to make sure that the currency conversion is correct, because sometimes it can be quite a bit off. So that's just one example. There are a lot of things you need to cross-reference, and that takes a lot of time. So this is just a snippet on 250 transactions. Doing this manually properly takes about 20 hours. So you can imagine, if you're really deep into the space, that could take you much longer.
And then obviously imagine this is just one wallet. We work with clients with tens of thousands to hundreds of thousands of transactions. So you can imagine taking it to that level becomes, almost non-feasible in a lot of cases to do it this way. The cost for the client would be too high, and even the time constraint on the client, if they were going to do it themselves, is simply not possible. And something that is sort of shown in that video there is just the complexity of the on-chain data. So when we're looking on-chain and we're trying to determine what actually happened, sometimes you can spend 5 or 10 minutes on one transaction trying to figure out, just from the context on-chain, what actually does this transaction represent? Is it a staking deposit into a staking contract? Is it a liquidity pool token? Is it a disposal? Is this the client's wallet and they've not told us about it? There's a million questions that can come up once you've already done this analysis. So, that manual process is really just showing one part being the analysis of transactions, and then you actually need to piece together all the different wallets, all the different locations, exchanges, etc. And really, that's one of the primary benefits that I see of the softwares. And we're going to now show you a demonstration of what this sort of manual process can turn into if you automate it and start using a software like Crypto Tax Calculator. So I think Matt's got a little demo ready for you guys. Even going to do a live demo, aren't you, Matt?
Yep, perfect. You guys can still see my screen here.
Yeah.
Cool. So yeah, I'm going to give you a bit of a live demo on how crypto tax software works. I'll just go ahead and log into my portal here. Right, so this is a portal specifically for accountants. This is the clients page. This is where you can work closely with both your clients and your colleagues on the platform. As you can see here, I'm acting as the accountant. I've got 3 clients, David, Brian, and Jane in my portal. You can also invite team members if you've got any colleagues that you want to also add to the platform. You can go ahead, invite them via email to get added into here. Now, the first step would be to import the data for the client. You can either get the client to come into the tax software and they can do the importing themselves, or you could collect the data from the client and then as the accountant, you can import on their behalf. As you can see here, I've imported some of my exchanges. If you want to add a new integration, just go in the top right corner here, click Add Integration. We've got support for over 1,000 different centralized exchanges, blockchain wallets, and different protocols. So it's pretty rare that we don't have support for an exchange that you're using unless it's a super uncommon one or a brand new one. But let's say you're using Binance, for example. Go ahead, type in Binance. Here, you can either import the data via API keys or CSV files. It's really up to you or your client which method you want to go with. I know some people love the automation behind an API. Others might be a bit more old school, enjoy dealing with CSV files a little bit more. On the right-hand side, though, what we have here are instructions on how to get the CSV file from Binance and upload it into Crypto Tax Calculator. Likewise, if you're using the API, we've got instructions which is specific to that API. Now, your client might also be doing some on-chain activities. So they might have a MetaMask wallet, for example. Just go ahead, click that. And what they'll ask you to do here is just plug in your public wallet address. So if I just get mine from here, go ahead, plug that in. Okay, I already added that in. Let's say I'm going to add in my Binance Smart Chain wallet. Go ahead, add that in. And then what we're doing here is we're getting the data directly from the blockchain scanner and entering it into Crypto Tax Calculator. Once the data has been imported, what you can do here is you can go on over to the transactions page to see how everything comes up. So this is essentially a fiat denominated ledger where we show you all the details of your transactions. You can open them up, see what category it is, whether it's a buy, whether it's a sell, an airdrop, anything that it is, it'll be categorized here. Any fees involved, any capital gain or losses, everything will be displayed in this transactions page. What is arguably more important than the transactions page is this review page. So as I mentioned before, not all tax software is perfect. Every now and then you might need to come through and make some manual reconciliations. And the reason why is the data that you get in crypto can be quite dirty, or in some cases, the client might not give you all the information. So, for example, here you can see there's a transaction that's uncategorized. So our system, we don't know whether to buy, to sell. All we can see is that there's some Ethereum that's coming into this wallet here. But because the user hasn't given us any information about the source of the transaction, we don't want to incorrectly assume what the category is. So this is just an example where you might come along. You could be like, hey, look, this is actually a buy transaction, or it could have been an airdrop. There are lots of different categories it could fit into. But this is where either the accountant or the user could come in and just manually make that adjustment here. Another thing we have is missing price issues. Every now and then a client is trading a really weird coin or NFT that we just don't have price feeds for. That's completely fine. I think we all trade some tiny micro caps every now and then. If that's the case, you can just go through and manually enter in the price at the time of the transaction. And last thing I'll show here is missing purchase history issues. So to give you an example, let's say you bought Bitcoin in 2015 and you sold it at the start of this year. If you only import your data from this year and you don't import your data from 2015, what's going to happen is we're going to see a sell of Bitcoin, but we're going to be missing the initial buy. We're going to be missing that cost base. And as you can imagine, if you got the sell without the buy, that's going to cause issues in the system. So again, the software is heavily reliant on making sure the user provides all their data and making sure they go through and just make sure that everything is accurate. Once you have reviewed everything, if there was anything to review, you can go to the reports page. We date them all the way back to 2013 because we understand sometimes people forgot to report previous tax years, but that's completely fine. Just dive into any tax year that you need, and then you can go through, download the tax reports that you're after. We do have support for over 20 jurisdictions. So, if you're based in the US, we'll have US specific forms like the Schedule D, 8949, that kind of stuff. But yeah, you should have every report that you need here, file it to the accountant or directly to the tax office. Last thing I'll go through here is just we have a nice portfolio page if you want to see how you're doing in the market, any winners, any losers, that sort of stuff. You can go through and look at the portfolio page. So yeah, that is about it.
Awesome. Thanks, Matt, for doing that demo. As hopefully everyone was able to see from that compared to the manual process, there's just this really, really nice, clean feel to using a software where we've got a really clear structured workflow. And I think that's probably what I see as being one of the primary benefits to this is if you're doing this manually, you really need to be organized in some form of structure you've created so that you know how to step through this process. Crypto Tax Calculator makes it really easy to follow that process Matt outlined in terms of uploading data, reviewing the data, checking the tax errors and fixing tax errors, and then getting the reports out. Some of the biggest issues we see are, clients forgetting to provide data or, not knowing, not being able to access data, forgetting about wallets, all of these things. And these are all areas that the software makes it much easier to basically point out these different areas and, follow through and make sure that all the T's are crossed and the I's are dotted, essentially. And so if you jump to the next slide, Matt, I reckon we've got some of the benefits. Yeah, so like I was saying, structured workflow. Something I really like about Crypto Tax Calculator is the efficiency around being able to view transactions on chain. So that link immediately from any transaction in the transactions menu, you can jump to the on-chain data. So for example, like Matt showed you, you might have an uncategorized transaction where the software isn't able to automatically categorize it. CTC is super user-friendly, allowing you to link straight from that CTC menu to the transaction on chain. So you can take a look and see, all right, cool, I can determine what that is. It's a staking deposit, and then you can apply the correct category in the software. The accuracy is a big part. Obviously, it's a challenging calculation to make manually, especially at high volume. Software ideal for that, just automatically calculating all the relevant figures once you put the work in. So I always think of it in the sense that, the software should really be doing the reporting, and all you need to do is get everything prepared to feed into that algorithm, and then it will spit out the right thing. If you don't do the work to put the right input in, then obviously the output's not going to be accurate. So these tools are really, really accurate, assuming you're able to achieve, they're as accurate as your data. And so as long as you're able to do due diligence and get your data in or your client's data in accurately and have a process around that, you'll find that they produce really accurate reports. Portfolio management, really exciting. A lot of clients love using the Crypto Tax Calculator software just to be able to check, daily or weekly, whatever their schedule says, and sort of see if they're up or down. Things like tax loss harvesting, really beneficial come tax time. and automated report generation. So depending on the software you choose, you'll either need to manually prepare reports, or the software might do it automatically. CTC, amazing because they're one of the few softwares to provide reports for both traders and investors. So as a trader, there's a different tax report requirement, at least here in Australia, and that requires a trading stock tax report. CTC caters to both formats, both investor and trader, making it really easy, no matter your situation, to get a report straight out of the box. And so again, it lets you focus on the data, categorizing the data right, and then all of the report generation, everything you need to actually submit, will be prepared by the system. In terms of challenges, we can't stress enough how much it relies on users importing their complete data. I work with clients every day on this, and I would say probably 90% of our problems arise from how difficult it is for clients to give us everything. I know this from doing my own tax, that, I had all the same questions for myself that I had for my clients. And that surprised me because I sort of thought, oh, who doesn't remember their wallets or these different things you do? But if you're not actually keeping track of this regularly, after a few years, you'll find when you look back, all of a sudden it's a blur. And so just doing due diligence by the client to say, hey, what's every single wallet, every single exchange you've ever used, and getting clear on that list first. And I expect no matter how clear the list is to begin with, something will pop up down the pipeline where they say, oh, I forgot this wallet, or I forgot that exchange, or that exchange went bust. So lots and lots of focus on understanding what the client's done first, and then obviously the challenge in front of you, rather than it being a black box and you just have no idea what to expect, essentially. So other limitations are API and CSV stuff. So Matt mentioned CTC does really well to provide instructions. These instructions are so important because some APIs for certain exchanges, there might be an API connection, but it might not allow trades, for example. So even though there is an API, it might be pointless in a sense using it because the exchange actually doesn't ship trade data. You might get the deposits and withdrawals, but you don't get the trades. And of course, you need the trades probably more so than anything else. So you need to be really careful around data support. What does the software integrate? Usually it's not the software is doing the right thing, but exchanges have limitations. So for example, Huobi is one of the exchanges that trades, they just don't let come out of their API. So the exchange is actually a part of this challenge, because for someone like Crypto Tax Calculator to integrate an exchange, they actually need to work with that exchange and that exchange's own API limitations. So the more you get into this, the more you see that understanding the best way to upload Binance data, to upload, Optimism wallets, to all of these different things might have a API that's better, or they might not work with the API, so it's better to use the CSV. Sometimes you need to overlap both in rare cases. So there's a lot of challenges around the data. All the softwares are doing really well to make it more easy, but there is, of course, still some challenges. For example, if an exchange pops up that, like Matt said, they might be really niche, CTC hasn't integrated it yet, there might be no clear way to take the data from the exchange and get it into CTC. The way that you do that is with a manual integration. So the software will always let you upload, like an Excel or a CSV file of, your manual trades that you write into an Excel. And so a big part of what we do as a company is we assist people with those smaller integrations that the softwares haven't done because they are such a minor volume of people. People come to us with all sorts of things, and we'll flip it and reformat the data so that we can upload it to the software. And that is required less and less because there's so much coverage from CTC. But that does still pop up occasionally where we need to understand how to get data from one format to another that goes into the software. Touching on categorization, really important that all transactions are correctly categorized. This can take, a really quick, speedy session if you don't have many things. CTC will automatically categorize a lot of your transactions. It's still worth reviewing. I have occasionally found things that the system incorrectly treats. Most of the time it's really good, but it does pay to just ensure for your own due diligence that you agree with all the treatments applied. And there will be categorization that needs to be done manually because CTC or whichever software you're using doesn't know how to apply or what label to apply to that transaction. So in order to do that, you need to understand the tax guidelines. This is jurisdiction based. In the US, I believe it's even state based. So you need to be really clear on your very particular tax treatments for, say, liquidity provision or bridging. There's a lot of these gray areas that different jurisdictions have different opinions on. It's still a little bit of the Wild West in terms of tax in crypto. A lot of different opinions. I work with a lot of accountants all across the world, and it's amazing to hear how different, even within the same jurisdiction, sometimes the opinions are. And so, yeah, it really pays to understand the tax guidelines if you are going to undertake this yourself. Obviously, if you're an accountant, you're probably aware of the tax guidelines. It's part of your job. But if you're an individual trying to do this yourself, it's, I guess, dangerous in a sense to go in blind, and it's really important to either work with a tax professional or understand the guidelines yourself. A few of the other challenges: high transaction volumes are very, very difficult. So if I've got a client with 100,000 transactions, really we have to have a difficult conversation with them around this is either going to be very expensive, very time consuming for you if you undertake it yourself, or we're going to have to find a blend of complete accuracy and time. So there are cases we have that people have just done so much that they might decide, hey, it's not feasible for me to get this 100%. Obviously, as a reconciliation firm, we never ever like to hear that. We would love to always get everything 100%. But we are aware of the challenges to the user as well, in that someone has to help these guys. So even in cases where we say we might not be able to say this is 100%, we're still happy to tag in and help the client get it as far as they can within their budget. Obviously, with the disclaimer that until everything's done, we can't guarantee the accuracy, but we can help the client head in the right direction. So one of the biggest things I say is, depending on your entity, depending on your appetite for doing this sort of work, be careful around your transaction volume, because even 1 to 5,000 transactions can take a bit of time. So as soon as you hit, 50,000, you're going to have a real nightmare, and that's almost unavoidable. So the reason that's tricky as well is one of the challenges is reconciling to the actual balances provided by the client. This is our classic traditional accounting accuracy check. We want to make sure that the software actually states at a point in time that the software balances match the true holdings of the client. And that's how we basically determine whether or not we're happy with the result of the reports, is whether the balances add up. That is a real challenge. We can do a lot of work on an account and then still find that further work is required to get the balances to reconcile. And so, yeah, real challenge around doing that, and this idea of the assumption of accuracy in cases that we haven't been able to do everything. So, yeah, that's a few of the challenges from my experience. And while things are improving, it is still quite difficult to navigate a lot of cases.
A lot of challenges, but yeah, hopefully as this space progresses, we'll see those challenges die down. I did also want to just quickly expand on one of the challenges that you talked about with like the API and CSV limitations. I think people who, come from traditional accounting, that kind of stuff, and come to crypto for the first time, they, I guess, underestimate how dirty the data in crypto can be. With stocks, you get this clean ledger at the end of the financial year period, all your buys and sells, all that data is very nice and clean. Even as Marc mentioned, with APIs, there can be a lot of limitations and restrictions that, sort of hold you back there. But also when it comes to the blockchain scanner, that data can be very difficult to read. So most of them, like Etherscan, a lot of the EVM chains, the blockchain scanner is relatively clean. But as soon as you dive into ones like Cardano, Solana, unless you really understand the chain well, it can be really confusing to understand what's going on. So yeah, I guess there can be a bit of an education gap with those sort of things. Or even if you're like depositing into a liquidity pool on GMX, like that one simple transaction, if you look at it on the blockchain scanner, it comes up in about 10 different lines. So I guess one challenge as a tax software company is how do we get those 10 lines into one clean transaction in the software that's easy to understand?
And especially knowing that those 10 lines are specific to one platform, and the way they format their data depends on the operation of the protocol, what the data is going to look like on chain. So even though everything's stored on chain, the data can look different in all different circumstances. And that's why softwares like CTC end up with, even though they have an advanced matching and categorization algorithm, there's still oftentimes that you need to manually categorize something because the on-chain data is probably going to be a mess in that case, and that's why it can't determine what the category should be. Even in times we see around APIs and CSVs, I've seen like some of the worst stuff that you would never see in TradFi, things like CSVs actually having incorrect data. So you've downloaded your data straight from the exchange and it's blatantly wrong. And there's ways that you can prove it's wrong, like balances they've declared being wrong. So many things where I look at this and I think if this was traditional finance, these guys would be sued. And it's because there is a real lack of regulation at the moment, and that wave is really coming through now. So I do expect exchanges, at least particularly in Australia, I can't speak for other jurisdictions as much, but Australia is really pushing for regulation of exchanges, which would likely lead to exchanges needing to follow some data format, which obviously as a tax professional in the space really excites me. So I've been waiting a long time for cleaner data and more regular data. So it'd be really nice to see that change over the next few years. Cool. So yeah, when it comes to choosing the right software, there's a lot of things that are factors in the decision. Available integrations is going to make your life a lot easier. So, for example, Matt mentioned Cardano. I know from my experience, Cardano can be an absolute nightmare. It doesn't integrate very well with most softwares. So, if there is an integration available, for example, in CTC, you might say, hey, I've got Cardano. I know that CTC handles Cardano really well. So we're going to choose to use CTC because it supports that blockchain. So really the first thing you want to check is, which software is most applicable for the exchanges and the blockchains and the different things that I've got. Because if you can see that they all connect really easily with APIs and that works for you, then that's amazing. You've got a really clean, easy, automated data access point. If you've used some more niche things, maybe you find they're only available in some softwares, or really you just want to make a plan around what is your data and how are you going to get it into the software. Like we said, that's where a lot of the challenges actually arise, which is surprising. You'd expect more to be to do with the interpretation, but really one of the biggest challenges is just getting all the data available and into a software. User experience, a massive part. I personally am very, very happy with the way CTC functions. I've used a lot of crypto tax softwares, and user friendliness is often lacking in a big way, to the point that if you weren't familiar with the software, you'd almost have no idea where to start. Big reason we recommend Crypto Tax Calculator from our company is that for anybody, you can pick up the software and you can follow the steps they've got in place to try and achieve this whole process of reporting and fixing things like we've talked about. Of course, there's still going to be challenges and things you need to understand, but the user friendliness of the software is such a big factor in whether or not the client can even be involved in any point of the process. How easy it is for yourself or the tax professional to actually work within the software and categorize transactions. CTC again uses a auto categorization engine. So it's actually quite a rare thing for tax softwares to categorize anything automatically. Most of them you have to manually do a lot of the work. CTC amazing for the way that they do categorize a lot of the transactions for you. User experience is, I guess, hand in hand with support. And, I can't vouch highly enough for Matt and the team at CTC and the way that they support their users. It's really, really great to be able to have a channel of communication with these guys, especially as an accounting practice. And, the work that we do, if we're using a software, we need to know that we can talk with their team and that we'll get responses and useful information from them. So that iterative loop that we talked about between CTC and Cryptocate, that's really, a software and a user should be following that same iterative loop always. So we've talked about transaction volume limitation. You certainly want to, if you do have high volume, you want to make sure whichever software you choose has the capability to not only import that many transactions, but actually function properly at that volume. A lot of softwares I've found, you might import a lot of transactions and it will say that's fine, but then when you actually go to use the system, it's so slow and clunky because of the transaction volume that you may as well not be trying. And so certainly want to make sure that, if you're in that situation, you choose the right software. Discussed level of automation already. The more automated a software is, the easier it's going to be to use. It's basically one for one, every transaction that the software categorizes for you, you don't need to worry as much about. Like I said, it pays to double check anything that's been automatically categorized, but a lot of work is done automatically by the software that historically would have needed to be done manually. And that is an amazing change because, like I keep coming back to, if you've got 50,000 transactions, maybe that's still achievable if the software is categorized, 49,000 of them. And even though you have to go through 1,000, that's actually a much smaller chunk of work than if you had to do all 50,000. So a lot of different automations, and I think Matt's going to talk a little bit more about that in a second. And of course, you always in crypto want to be aware of any security and privacy considerations to do with the software.
Yeah, just to sort of expand on like the level of automation and I guess choosing the right software. You also want to make sure, I guess, the right software is catered to your client's needs. So at the moment, we've just shown you the accountant portal, which is catered to individual tax returns. Some softwares do individual tax returns, some do like enterprise business clients. If you've got like a DAO and NFT that needs accounting needs, CTC has actually just launched their enterprise product as well. But yeah, just want to make sure it caters towards their needs. But yeah, just on automation, we've been working quite closely with a few different teams. Cryptocate, Marc's really helped us out with building out this product. Where essentially with the automation, you can create these custom rules. So let's say you're an NFT project and you can say, look, every transaction that goes into this wallet and is this currency, that's going to be a royalty. So, within a click of a button, you can create this rule and automate 10,000 transactions. Which, as you can imagine, if you want to do that math, it could be quite stressful. But yeah, I think the whole goal with the crypto tax software is really automating these kind of things, saving you time, automating at the smart contract level. Whether we see full automation in the future, up for debate. I don't know if we ever will. But what we can do is, I guess, work closely and keep upgrading these protocols, keep making sure that we have that correct tax treatment applied on those transactions.
Yeah, so really, really excited for the enterprise software that we've been discussing. It really takes the idea of automation to a new level where, like Matt's saying, you can build your own logic rules. So if you can figure out how to treat one transaction, you've essentially created the Bible around how the software is going to treat future transactions that have the same principles or the same logistics. So yeah, it's really going to be a step towards more automated future financial reporting for crypto. Just to recap on the best practices from our experience using crypto tax software, certainly choosing the right software. I think we've hashed that out enough today, but it is really, really important to choose a software that works for you and is user-friendly, because It can be the difference between 10x the number of hours. Like, it really is that much of a big deal, which software you use in terms of the time commitment. Understanding crypto tax rules goes without saying that in order to even undertake this journey, you need to have a familiarity with your jurisdiction and the way different crypto transactions are treated. Familiarizing yourself with whichever software you do choose. They all have different features, benefits, tools, challenges, things that we've discussed today. And the reason you want to use a particular software is so that you can take advantage of those features. So really, I always say to clients, before you start doing this yourself, really familiarize yourself with what is going to be the best strategy, what tools do you have at your disposal, and how can you use those to save yourself time. Because while it's good to learn on the fly, it's also can be better to learn first and then execute second, because it's really easy to get a way through something and realize, oh, there's that useful feature I should have been using to save me time this whole time. For example, you could be categorizing 2,000 transactions and realize that you could have got on CTC's enterprise level software, and you could have applied one rule and it would have done 1,000 transactions for you. So that's the sort of advantage that you can't afford to miss out on if it's available. That sort of streamlining effect of logic rules, different features like that are really a game changer. Full data collection is absolutely essential. So I have done tax reporting for myself. I've done it for hundreds, probably coming up to close to 1,000 clients that we've worked with across the globe, really. And everyone has the same problem. It is more of a challenge around missing information than it is to deal with information once we know it. So if we've got all the data, we can spend the time to analyze stuff on chain. We can ask the client questions about what this transaction represents. But the biggest challenge is if there is a gap in the data, what do we do about that? How do we address something that is truly missing and the client can't tell us what's missing? We can't determine what's missing. There is really like a black box in the data, and that is going to cause inaccuracies in the tax calculation. So a lot of what we've done as a company is build a playbook around how we deal with different circumstances, different tax errors, different cases where something's missing. What do we do? We either leave it missing and there might be some tax implications, or we might choose to manually recreate something that makes sense with the client, again being cautious of any tax obligations and liabilities that the client might have to get this right. But the way we view it as a company is, if something's missing, it's better to try and represent it as best we can manually than leaving it completely missing altogether. So yeah, that idea of the better you can collect the data to begin with, the less iteration you're going to have. So imagine it as though you start with all 10 wallets from the client and you can just do your whole process and then you can ship the reports, instead of maybe starting with 2 wallets and then all of a sudden you are doing your reconciliation and it's like, hey, is this your wallet? There's a third wallet. You've introduced a third wallet and that third wallet now connects to fourth wallets and fifth wallets. So there's this idea that if you don't understand the complete data set to begin with, you're going to understand it over time, but it's going to be, back and forth instead of a nice clean process. So really emphasizing how important it is to get clear on what data you're collecting, do your best effort in getting all of that into the software before you start reconciling. And that's going to avoid having, dozens of iterations with the client in a lot of cases. Important where we can to do a complete reconciliation. So just like traditional accounting, wherever is absolutely feasible, we want to do absolutely everything. We want to categorize all the transactions. If there's a withdrawal without a deposit, we want to know, where was that withdrawn to? Do we need to import that wallet? Every single withdrawal and deposit should be matched. Verifying on-chain transactions. So even though the software said this is a staking deposit into a staking contract, verifying on-chain that is the case, because there is, always the chance that the software miscategorizes something and we need to be aware of that. And reconciling the asset balances to the known balances. That process really constitutes a complete reconciliation to me. And that's what we do if we offer a complete reconciliation service. There is, of course, the challenge around which cases, if any, can you not achieve a complete reconciliation? And unfortunately, that is a real challenge that the crypto space is bringing. Probably more than ever, there has been, I guess, for lack of a better word, an impossibility around completing crypto tax, because there are situations where people have done hundreds of thousands, million transactions, and any accounting professional will look at that and say, this is going to take a huge amount of work, cost a lot of money, and in some cases, the amount it would cost to do the tax is actually more so than the tax position outcome itself. So someone has to pay tax, but they end up having to pay more to figure out how much tax they owe, which is a ridiculous situation to be in. And so that's, yeah, something that's really important to discuss with clients, finding that blend between accuracy and feasibility. And yeah, reviewing these reports despite how much effort goes into the softwares and making them produce accurate outputs. The onus always lies on either the tax professional or the client themselves to review the reports, make sure everything makes sense, and ensure that they're submitting accurate information. Of course, if you're struggling with this stuff, then it absolutely pays to seek professional help. Like I said, my company Cryptocate helps a lot of accounting firms that are more traditional Web 2 companies, or that's their clients, and we try and help them shift into being able to deal with Web 3 and crypto clients. Cool. So what does the future look like? Well, we're seeing a massive crackdown in terms of compliance and regulation in all international jurisdictions. This is not just in Australia, this is not just in the US. Every jurisdiction is in the process of formalizing tax law, formalizing regulation of crypto exchanges and companies. And that is going to really change and shake things up a bit in the next few years. I'm expecting to see big changes to the data we see from exchanges, big changes to the way we need to treat certain transactions and particular structures and things. DAOs are absolutely here and they're here to stay. I am involved with a number of DAO projects, and these are no longer just a fad. This is certainly something that there are legitimate organizations running in a decentralized manner, often managing millions of dollars of assets and revenue streams that are very considerable. And so these organizations are going to need financial reporting. And so something my company is doing is really breaking into the DAO space and offering financial reporting to these new form organizations. And I think as a space, that's really going to emphasize how important financial reporting and solving these crypto tax challenges are for the existing crypto space, being things like DAOs and degen users, all these people. There's really beginning to be a blend where there's institutional interest in crypto and assets, and so we're seeing traditional investors come into the space. We're also seeing organizations emerging in the form of DAOs that also need financial reporting, even though the tax outcome is still up in the air for DAOs. I expect that certainly different jurisdictions across the globe are probably going to try to tax DAOs. It's going to be interesting to see what happens in that space. Matt, maybe you're keen to chat a bit about the software side of the future.
Yeah, in terms of software, as I discussed before, like whether we see full automation, I think that's up for question, but I definitely think it is improving. If you look at tax software a couple of years ago, maybe you import all your data and, say 60% of the transactions are automated. Now, maybe that number sits at like 80 or 85 on average. And, where we go within a couple of years, hopefully that number is higher, but as you know, with more complexities with the transactions in the space, just means software teams need to make sure we keep up with all that automation, especially at that smart contract level. Just also wanted to mention with the crackdown on compliance, it's quite interesting. I think, Marc, you mentioned to me a couple months ago that Singapore is starting to have that discussion about crypto taxes for businesses, which is wild because Singapore has never really talked about taxes in crypto. I know South Korea is also having that conversation. All government officials in South Korea, they now need to report whether they hold crypto or not, which is pretty crazy. And the exchanges, as of June this year, they will need to start tracking holding. So I think we're going to see a lot of countries internationally, ones that were dead quiet about crypto taxes before. I think you're going to see them start to speak up a little more, which will be very interesting to see. Even Portugal, who's been tax-free, the last several years. Now, if you convert from crypto back to fiat within a year, if you hold it for less than a year, that's actually going to get taxable. So very interested to see that space evolve. Just on integrations with new blockchains, we're seeing all these new VC-funded L1s, L2s coming out, or the ones that fix the blockchain trilemma. They're all coming out. I think software really needs to make sure they're keeping up to date with this, because degens, that's where they sit. They're doing all that airdrop farming, trying to rack up as many transactions and volume as they can. So yeah, whether we see people come down and narrow onto one or two L1s, L2s, who knows? But my guess would be we're going to see lots more exchanges, lots more protocols where you can trade derivatives come out. And that would be quite interesting to see if we've just got stacks of L1s, L2s that people are using.
Cool. Awesome. Well, I think, correct me if I'm wrong, Matt, but I believe that wraps up the session. Did we have anything to end before questions?
No, I think just that last point, like in enhanced pricing data feeds, we're seeing lots of new APIs come out that are having more efficient, better pricing. You always see API people telling you how good their API provider is, but it is true. I think in the future we will get, a lot more improved real-time updates, that sort of stuff. And I guess customization with reporting. When I first started at CTC, we only had a handful of reports, but as tax offices demand new reports, trading derivative reports, income reports, they want to see all sorts of things. You're going to have that more flexibility and more customization come out with tax software providing those reports.
Yeah. And that's it. And they'll continue to get more aligned with what the traditional accounting world expects. For example, we worked with CTC for a while on an audit report because we kept getting questions from auditors saying, what's this and that, or could we see this information? And again, the reason I love working with CTC is they're really receptive to this feedback. Basically went and immediately started working on what we requested, being, these extra pieces of information, and that's now built into the software. You can extract an audit report that basically states every piece of essential information. So it basically says to the auditors, here's everything, there couldn't be any questions really. So I really like that approach to aligning the softwares with what the traditional world needs. And obviously any government-based treatment changes and things, we can trust that the softwares are going to be across that, and it's really nice to have that support. So yeah, that is the end of our session today. Thanks so much for listening, everyone. Hope you have enjoyed the session.